Can gold prices snap the losing streak and end July on the up? Welcome to our market analysis videos here at ZenFinX. For those who are new to the channel, my name is Connor and I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. And this is part one of the ZenFinX monthly forecast. And today we're going to look at the gold market in detail. And during this video, I'm going to provide to you a clear fundamental and technical analysis which will hopefully aid your gold trading for July. Enjoy. So the risk-off market sentiment really in June, I think, continued, especially towards the end of the month as well. The Federal Reserve Chairman, Jerome Powell, began his testimony in front of Congress towards the end of this month, and he admitted that a recession is certainly possible. And on top of this, we had sort of CPI figures all over the world continue to surprise to the upside, with the US being no exception to this. And the biggest takeaway for me for June was that the likelihood really of a hard landing from monetary policy tightening has increased, in my opinion. I think people think that central banks are going to support the markets, and they're not. I think people are trying to fit narratives as to get this bull run on the way, and I just can't see it just yet. Now, looking towards a gold forecast for July, I believe it's important to talk about the US dollar. And during June's forecast video, I mentioned that I wanted to see the dollar index reach 104. We smashed that level, and this is one of the main reasons that gold is underperforming. And the dollar is analysed every single day in our Discord channel, by the way. So make sure you check those comments, and you can join for free. It's a completely free channel, but that won't last too long. Until there is clear evidence for me to suggest that inflation is cooling down and the Fed may take their foot off the accelerator, then the dollar continues to be a bull market. It continues to be a market where I like to buy any dips, and this is likely to limit gold prices throughout July as well. Now, another factor to mention is, of course, U.S. Treasury Yields, and the 10-year yield particularly gained throughout June and is currently trading above that 3% level. Just like with the dollar, if yields continue to rise throughout June, and this can be seen as a negative for gold prices, but be sure to measure dollar and the yields throughout July. Now, finally, I just wanted to note on the recent sort of tail off we've had, or people could say pause, in the oil market. I think the oil did make a move towards that 100 level throughout the middle of June, and for me, this is what's fueling recession fears as well. But if that is the case, this is something that can actually benefit gold prices, because during a time of recession, gold can provide a real store of value. When we look at the overall gold picture, my overall sort of outlook, it feels like a real tug of war between the inflation and the recession odds at the moment. Obviously, higher treasury yields from the rising interest rates from the Federal Reserve means gold gains are limited right now. But at the same time, we have this increasing chance of a recession, and falling oil prices may be seen as a positive for gold. And this, for me, leaves gold in a very interesting position going into July, and I remain sort of neutral to bullish. Okay, on the chart for this gold market now, and just first of all, on the monthly chart, you can see how it's been sort of a month where I've mentioned that tug of war between inflation and recession, and as a result, we're down. By the time July comes, we could be up. It's quite close. There's not much in it, and you can see that sort of we're still in this sort of ranging market, and we've been in this ranging market, or in this range, since like July of last year. We've not had that real expansion yet, which suggests to me that something big could be coming. Now, I've kept in my sort of drawings from last time, because if anyone managed to sort of catch any of the gold moves that we put in the Discord channel, you can see that we had this level as a real level of resistance. This sort of order block, we've had this break of structure here. We had some liquidity here, which was taken. We've moved up, and here as well. We've moved up into that order block level, and then we've traded, say, significantly down, a good 500 points or so down, which is great, which is good news. But we are in this situation where we're sort of trading between. Let's get rid of this. We're trading between this low here, and if I get rid of this, and get rid of this because that's been mitigated now. And we're also trading somewhere close, somewhere in between this range. You can see that the market seems to be, if I zoom out a little bit, here we go, seems to be making that move to the downside. Potentially we have this wedge formed, and this worked quite nicely for oil. If you watch my oil market, potentially we're going to get a squeeze of the market into here, maybe a take of liquidity of this wedge, retesting the low of the range, retesting high of the range. Either way, I think we're going to get a sort of an expansive move in either direction, either up or down, and I think it's coming within the next sort of couple of weeks or so. I want to see prices squeezed a bit more. I want to see a liquidity build up around this 1830 level, and we have this real push to either the upside or the downside. What I know probably you're thinking, what do I fancy? Do I fancy the move to the upside or the move to the downside? And if I'm being completely honest, I love how this level down here held. And I mean this level, which I want to actually mark as a bit more of a significant level. I like how this sort of 1780 level held at this low here. I think if we broke below this level and potentially even below the 1750 level, then we're really in this bear market. But at the moment, prices seem to be holding, and they filled in all this price inefficiency we have here, and we've started to have this move to the upside, and potentially we could class this as a double bottom, what we have here. So maybe this is the springboard for prices to move up, and my target, if we're going to move to the upside in July, is I want to see prices break above this sort of trend line we have here and make a move towards 1900, and potentially even this imbalance we have in here, which I will leave marked throughout the entirety of my videos, because you watch when gold does go up, I bet it fills this price imbalance we have here. If we're going to get this move to the downside, what I need to see is a break of this double bottom here. And when I say a break, I mean a candle closure below, not a wick, because that can be seen as a liquidity grab. So I want to see the market break below this level. If we can get a break below this level, then I want to sort of sell on the mitigation around 1815. And my targets and my levels to watch out for July for the downside, if we were to get an expansive move, is, for me, it's got to be this level down here around at 1750. I want to see if we can get another test of that level. So that's my outlook for gold. Neutral to bullish. I like the springboard from this double bottom potentially, and the fact with this swing low held from January of this year. Potentially we went and retested here sort of the yearly open, and that can be seen as good support. If we are to get a move to the upside, maybe towards this 1900 level. Move to the downside, I'm looking towards the 1750 level. But I think prices may squeeze in this range for the time being. And that is my outlook for gold. If you've enjoyed this video, make sure you've liked and subscribed to the channel. Drop in your comments on where you think the gold market is going. The team here at Zenfinex, myself, we have much more monthly forecast videos coming out. I think we have another 3 or 4 to come out. I think tomorrow is going to be oil, so stay tuned for that and make sure the nose notifications are turned on. Have a great day, everyone. Cheers. Thank you.